Hello and welcome to Gradient's weekly business roundup for the week ending 4th February 2022. Here are this week's headlines. Government seeks IMF advice to restructure country's debt. $200 million credit line from Pakistan under discussion. 450,000 barrels of crude oil from Cyprus and 50,000 metric tons of fuel from the Indian Oil Corporation. 100 billion rupee grassroot level government initiative kicks off. We will also briefly look at other notable news that made it across to our news desk and wrap up with a capital markets update. In our top story this week, according to Basil Rajapaksa, Minister of Finance, Sri Lanka has sought technical advice from the International Monetary Fund on how to better manage debt servicing and boosting foreign reserves. However, he denied that Sri Lanka has resorted to an IMF bailout. Following the request, the IMF had in writing agreed to extend their support. It was also revealed that discussions with the World Bank, Asian Development Bank and other agencies are also underway and that the country intends to manage the current foreign reserves crisis within the next 6 months. Speaking to Mirror Business, Sajid Atyagala, Secretary to the Treasury, revealed that Pakistan and Sri Lanka have agreed in principle on a $200 million credit line with details yet to be worked out. Under this credit line, cement, basmati rice and medicines manufactured in Pakistan are to be imported through the State Trading Corporation. Such activity follows a multiple credit lines to Sri Lanka, currency swaps and debt moratorium from India amounting to roughly $4 billion and the $200 million currency swap from Bangladesh Bank, which has now been drawn down. The Cabinet approved a proposal for the supply of 450,000 barrels of crude oil for the Sapagascanda refinery from Cyprus-based Terra Nevis Group on a 6-month credit. According to Dr. Ramesh Patrana, Cabinet co-spokesman, this arrangement is to procure crude oil for the Sapagascanda oil refinery from August until the end of the year, as steps have already been taken to obtain oil for the refinery till July. Additionally, according to Uday Gammanpilla, Minister of Energy, Sri Lanka will purchase 40,000 metric tons of diesel and 40,000 metric tons of petrol from the Indian Oil Corporation. It was unclear if this arrangement is a part of the 500 million credit line given by India in January. Moreover, the Cabinet also approved the Greenstat Hydrogen India Limited affiliated body of Greenstat AS Norway to conduct a feasibility study on a pilot project for generating green hydrogen using a floating solar and wind combination. Such action is a part of Sri Lanka's plans to end the use of fossil fuels by 2050. The government kicked off a 100 billion rupee revival program at grassroots level with the intention to revitalize livelihood, socio-economic infrastructure, environment and social development at village level. The initiative involves 100,000 people engaging in projects of 1 million rupees each. In other news this week, according to the SLTDA, 82,327 tourists arrived in the country in January. Russia was the main source of arrivals, accounting for 16% or 13,478, followed by India, Ukraine, UK, Germany and France. Sri Lanka revised its tourist arrivals forecast for 2022 to 1.1 million from 2.3 million, accounting for the surge in the Omicron variant in major source markets. According to Prasanna Ranatunga, Minister of Tourism, the spike in COVID cases, particularly in top source markets in Western Europe and India, has slowed the tourist arrivals, whilst the strict outbound travel restrictions imposed by China and Japan had also impacted the numbers. Prior to the pandemic and Easter Sunday attacks, tourism share of GDP averaged between 5 to 6%. The Export Development Board says exports of electronic and electricals reached $425 million, up 38% year-on-year in 2021, compared to $328 million in 2020. The sector targets an export revenue of $1 billion by 2025. It was revealed that the industry consists of more than 100 entities engaged in the design, manufacturing and exporting of electronic and electrical products and services with approximately 37,000 employees. LMD Nielsen's Consumer Confidence Index reached an all-time low of 25 in January. Main movement was seen in state of personal finances, where 88% consider the state of their finances will be not so good or bad over the next 12 months. Ability to buy essentials, where 100% have a negative outlook on their ability to purchase essentials in the next 12 months, almost on par with that reported in December. With regard to job prospects, where 91% are pessimistic about their future job prospects, better than the 94% recorded in December. In contrast, the LMD Nielsen's Business Confidence Index in January reached a 9-month high, increasing to 122, up 3 points from a month earlier. According to Terika Miedadenia, Director of Consumer Insights at Nielsen IQs, attributed the slight improvement in sentiment to businesses formulating new strategies to salvage and improve on whatever has been lost due to the pandemic in 2021. And now let's take a look at the weekly movement of the All Share Price Index and the S&P SL20 Index at the Colombo Stock Exchange. Here's how the rupee performed against the dollar this week. In other market news this week, LB Finance is to purchase a 64.63% stake in Martech Finance for 400 million rupees at 9.72 rupees a share. This is a part of the central bank approved master plan for consolidation of non-bank financial institutions. Ajit Gunawardena is to be appointed chairman of TJ Lanka. TJ Lanka announced that former deputy chairman of John Hughes Holdings, Ajit Gunawardena, is to be appointed chairman with effect from 17 February 2022, consequent to his appointment as an independent non-executive director. And with that, we wind up for this week. Until we see you again next time, thank you for watching and stay safe.